are listening to What's Up Digital Lending, the podcast that explores the exciting world of digital lending. We make a deep dive into the most important issues and talk to the leading minds of the ecosystem.
Welcome everyone. My guest today in this episode number 9 of What's Up Digital Lending is Paul Melamed. He is the CEO and a senior partner of Aquarium Investments from Riga in Latvia. They are one of the owners of INDEMO, a fintech lender also from Riga that enables loan-based investments with a focus on Spain. Beyond that, INDEMO belongs to the increasing group of neatly EU-regulated digital lenders as it owns a MiFID license. My name is Konstantin Fabricius and I am the host of this podcast. Welcome, Paul. Great to have you here in the show.
Hello, Konstantin. Thanks for having me.
Now pay attention, please. The content of this podcast is expressly not to be considered investment advice, but it is intended solely for your information. We do not assume any liability and will not share any profits. Paul, let's start with you. What do we need to know about you and your career?
I'm not sure what you need to know, but yeah, I've been in finance for a long time, so more than 20 years by now. I worked in a number of local regional banks in different positions, in different roles. I started off doing FX, initially on the margin desk. Then I went into prop trading in FX, foreign exchange, meaning interbank trading, stuff like this. Then I moved into fund management, other markets like bond trading, exotic FX, stuff like this. So I would say I've covered a lot of different types of markets, different strategies during my banking time. Later, I moved into asset management. I was invited to run an asset management company in Latvia that was part of a big financial group. Eventually, we bought the business out with my former partner. And since then, we are managing money kind of discretionarily and basically on our own. Currently, I would say we are more of a family office type of setup. So we deal with big clients, high net worth individuals, families, privately run corporates, and we do all sorts of things. We manage liquidity for these guys. We have the possibility to consolidate their different investment accounts. And, we have a very kind of strict belief system about what's going to happen and how you need to position yourself in the markets today. We also do quite a bit of M&A. It's not in the asset management business, but another company. But we share some of the shareholders. And we do stuff like M&A, private equity stuff. We have a bunch of projects in the pipeline, and INDEMO is one of those. I guess if I had to pinpoint my expertise, I would say it's trading and macro analysis. So we employ a macro top-down approach. We look at the global picture and then come down to a particular investment idea. So I can talk a lot about that stuff, but I think we should focus on fintech, right? It's more to do with the nature of your podcast.
It's good to know that you have one of your foci on macro trends, because we will come back to this later on. A lot of things have happened.
Yeah, it's
since the interest rate change, and I'm pretty keen to hear from you your view specifically when it comes to INDEMO's products. But let's wait a couple of minutes. Before, I would like to know something else. And today we listen to you rather than to someone of INDEMO's management team. How does it come? Why Paul?
I don't know, because the CEO wants me to talk to you, I guess. For disclaimer's sake, I have to say that my company and me, through the company, we are investors in the INDEMO platform. So we're a shareholder. I think it's a little bit less than 10% of the entity at the moment. I'm not involved in operations either INDEMO or any of the companies that are partners of the platform. So, while I'm happy to give the general outline of operations and, key aspects of the business model, I'm not really the guy to talk to about day-to-day operations. We have an executive team and a CEO for that. So I think at some point it's best to invite him to talk about the day-to-day stuff. I know the founders very well, the guys that were the initial founders of the company. Most of them are my former banking colleagues, and we kept in touch. We are involved in other businesses and all sorts of, corporate deals and things like that. So when they offered this investment, it was probably what you can call an angel round. An angel round is, a nice name for family and friends, Then we did another round, and currently there are 15 partners, which, who basically realized that there are a lot of changes going on in the financial industry. And, if you want to be successful and innovative, you have to look into retail. And it was for us, it was a nice kind of diversificator because, as I've said, we're focused on big money. It's a nice way for us to diversify, basically. We are thinking about providing investment baskets in the future for liquid instruments as well, but that comes later. So I think people realize that EU is a huge market, right? It's got 450 million or something like that of population. It took us a long time to get where we are, so maybe 2 years. A lot of time, a lot of emotions, a lot of money. Given our experience, we are bankers, we are finance guys initially, which kind of differentiates us because typically it's either IT guys or someone from the industry, like some business that, thinks about crowdfunding or, some sort of non-banking lending solutions. But in our case, we are finance guys, right? So we kind of played it by the book. We realized that regulation is important from the start. That's why MiFID and why we're licensed and, regulated by the central bank. Yeah. So, I think also there's a clear niche for financing on the SME side. Banks are not very keen on dealing with small and medium enterprises. And I would say this problem is across Europe. Like one of my partners in the asset management business is an Irish national. I mean, his name is Michael. He lives in Dublin. And it's the same problem as it is, say, in Latvia. Small, medium enterprises have a lot of trouble raising capital. Especially at current rates, right? So I guess that's it, that's why.
Yeah. Okay. Thank you. Before we drill deeper into INDEMO's business model, I would like to know when INDEMO was founded. I haven't found it on your website.
Well, probably it's a secret then.
Yes. Could you please reveal it for the audience here?
Yeah, it's a couple of years old, as I've said. I'm not sure the exact date and month and the year, but it's about 2 years, I think, 1.5, 2 years ago.
Okay. And you have already mentioned the SME market, and which brings us to these kind of deficiencies that the European market has to suffer from. Usually people found a company to resolve such deficiencies. And what kind of deficiencies did you guys see with respect to your target market?
The idea behind, the general idea behind INDEMO is to create a platform where, these small to medium enterprises could offer their products and their services and their investment opportunities, and retail would be able to invest in those, right? And as you know, in case of INDEMO, we're starting off with real estate markets in Spain. And for that particular market and to be involved in the types of deals that we're bringing to INDEMO, you need a lot of capital, right? So our kind of strategy could be summarized in, small tickets for big ideas type of thing, because normally you need a lot of capital, you need a good team, you need legal expertise, you need all of these things that small guys with not a lot of money just don't have, so they stay away from this stuff. We believe in investment democracy, and that's kind of our slogan. So, bringing interesting new products for your average investor kind of thing. I think another reason is regulation. We've briefly discussed this with you previously offline, but clearly the crowdfunding space and non-banking lending space has been, riddled with fraud, all sorts of problems. I mean, people were just giving money and that money was stolen, all these things. And we do see this shift. And basically, we believe that either you're going to be regulated or you're not going to be competing, right? So, and I think this transformation is currently ongoing, right? Because we still have all these platforms that are kind of the regulation space. Yeah, and that's the gist to it.
I have a lot of questions. My first one is, as you have mentioned, democratizing investments. Are you only focused on retail investors, or do you also take institutional investors on board? This is what I think I have learned from your website, but it might be wrong.
Yeah, well, the license that we hold is a brokerage license, so it doesn't actually specify what kind of investor you can have, right? So I think it's important to differentiate between target investor and just any investor, So the target investor is retail, and we've built a company around that. So, in terms of AML, KYC procedures, we are trying to be as transparent and easy as possible, for instance. And obviously, it's easier to do AML stuff for $1,000 or euros than it is to do for 10 million typically. So the target investor is retail. It's a bigger market, It used to be very difficult to work with retail, and that's why a lot of the banks, especially private, like kind of investment banks, are shunning away from retail money because the regulation was just so out of this world. It made everything, non-competitive. I would say it has changed, especially in Latvia, because we went through a very difficult period in kind of 18, 19. Where basically the whole financial industry was rebooted, and, regulated entities had to get rid of a lot of their big clients and all this stuff. So this fresh approach kind of gives me hope that we'll see, interesting projects in fintech popping up in Latvia. And in fact, we had a few approaches from foreigners for help, in developing procedures and the necessary documentation to get a license locally. So there's a lot of interest from the outside. I guess that's the answer now.
Okay. There are two ways to invest via your platform. You offer two instruments. The first one is the investment into a mortgage loan, and the second one is into discounted debts on the Spanish market. My first question would be, why exactly these instruments? And my second question would be, to drill a little bit deeper, why Spain? Especially against the backdrop that the real estate market suffered a lot in the noughties. What do we have to know today about this market? And I address my question to you as a macro economic specialist. This would be very interesting to hear from you what you think about it, especially the development of this specific market.
Right. There are many questions in your question.
Yeah.
Like in terms of macro, I think you have to look at EU rates, right? And what's been going on, and why are rates so high? And the reason often given is the push against inflation, right? So, the central bank is raising rates because inflation is high, and supposedly raising rates, limits demand, and this way, there's less demand for goods, and prices drop. But in reality, there are different types of inflation. So, like, you have financial inflation, which is mainly to do with financial assets and their, change in prices there. You have consumer inflation, which is, a methodology of calculating general prices, price levels and changes. You have different types of consumer inflation. You have like core, super core, all this stuff. And one important thing that I think everyone needs to understand is that drivers of inflation could be both demand driven and supply driven. So, for instance, inflation in US, and also inflation is a monetary phenomena. It's basically the debasement of money, right? So in US, inflation was kind of demand driven because we had all these subsidies and all this money going into the pockets of consumers. And that's what's driving it. So actually in US, if you make life miserable for a consumer, then the consumer is likely to spend less and prices drop. But in Europe, most of the inflation was energy driven. So it's supply side inflation. And look, raising rates does not bring the supply of energy, right? It doesn't do anything to solve this problem. And that's why, despite ECB raising rates by, whatever it is, 400, 450 basis, inflation is still, average inflation is 9% year on year, right? Precisely because it's energy driven. And to solve this, you need to solve that particular issue. So that's kind of the macro backdrop. We can discuss this forever, as I've said. But the point being is that at some point, I believe that the rates will stop going up. And actually, I believe we're very close to the end of the cycle, right? For various reasons. We can discuss it, but that's my belief, right? So high rates obviously impact the consumer. It doesn't matter if it's supply driven or demand driven. You pay more for your credit, you have less money to spend on stuff that is outside of your financing needs. So it definitely affects the real estate market as well, especially in Europe, because in Europe, getting a fixed rate for, 20 years is close to impossible. Typical length of a loan would be, 3-5 years, and then you have to rebalance, and it's typically variable, linked to Euribor, something like this. I think we'll definitely feel the effect of that. But in terms of INDEMO product and why Spain and, all this stuff. So first of all, we are planning 2 products, but we're starting with the first one. And the first one is discounted debt instruments in Spain. And the reason why we believe in this business is because we have good experience in this business. So one of the projects that we've been involved in with the team, and I mean, not just INDEMO team, but general kind of high level team, is lending in Spain. We've been doing this for maybe 10 years, I would say very successfully. And I would say the Spanish market is kind of unique in real estate. Like even in problematic times, prices tend to stay relatively stable and they even go up a little bit. So, for instance, as rates were going up, the quantity of deals actually increased in the real estate space. In terms of our first product, it's discounted debt. So basically it means that there is a mortgage that someone took out with a bank and couldn't pay it off, right? And in this case, we are dealing with second mortgages. right? So second residencies. Because in Spain, it is very, very, very hard to legally get hold of the first residency, right? It's the consumers are very protected. It's a very difficult process. Second residency is easier. The mortgage is basically in distress, and that's the reason why guys like us can come to the bank and buy the mortgage at a discount, and at a very steep discount. So we're talking like, 50-60% discounts. So for every dollar you spend, you get 3 in valuation, market valuation, right? And it's a different proposition, right? Because you're buying something with a huge discount to market rates. And basically, it boils down to being able to communicate with the distressed debtor, right? And and as opposed to banks, we are very keen to settle out of court, right? Because we save a lot of money in terms of time, right? We spend less time, so it's better. We might not make as much, but the turnover increases, right? So unlike banks, we're happy to talk to the debtors, and it's a way for them to solve this problem that they have to solve, kind of thing. If out of court settlement is not possible, then it boils down to your legal expertise of your in-house lawyers as well as your network of connections. And INDEMO is working with a partner company that is versed in this, that has a team that had, decades of experience in this particular market. And, it's also interesting because real estate, you can't look at it broadly in European terms. I would say every country is unique. So, like, you can't compare Germany to Spain, for instance, because the habits of consumers are completely different. The wealth of consumers is different. Everything is different. So we believe we know the market, we know this geography, and we've been successful in this geography. So it was a natural decision to bring this product as the first product for INDEMO. But generally, I would say it might look like INDEMO is all about real estate, but we have ambitions way beyond that. I think it could be a platform for any type of SME from any industry to finance companies' needs. And I'm hopeful that we'll increase the types and the number of products that we provide to our potential investors. So it's not just real estate, right? Yeah, I think just to finish off on the rates and the macro stuff, I don't think we've felt the impact of higher interest rates yet, neither in US nor in Europe. I think people are very complacent in that respect. And if I'm right, then the supply of this distressed debt is just going to increase. So, if you have the capital and if you're not leveraged, it could be a time of opportunities, right? So, yeah, so I guess.
But it's not only about discounted debts, right? Investors also have the opportunity to directly invest into mortgage loans that are not distressed, correct?
That's the second product that's coming, but it's not as lucrative. The yield is less, right? So we wanted to start with something that could, motivate people to sign up for the platform and would be getting an interesting return. So to give you an indication, investors could be looking at around 15% return on the discounted debt stuff, while we're looking at around 9-10% for the mortgage loan business, because there's no discount, right? It's basically lending at market valuations, so it's a bit different. So we think it's more attractive. It sounds more risky, but it really isn't. It's the same property, right? And also, I think I used to be I used to be kind of against the real estate market in my early days because I was so focused on, currencies, trading and commodities and all this stuff. And it was just not that interesting for me. I was actually very bearish in the run up to 2008. And in fact, I sold my property at the top of the market or close to that. So I was a hobo for a while just because I was so positive that this thing was going in the wrong direction. But if you think about it, and if you think about the real estate as an asset class, I think it's interesting historically because it's very easy to understand. Everyone, either rents or owns, or, someone in the family owns some real estate. I would say it's a natural FX hedge. I gave you an example offline about, different currencies that I had to endure in my life, from Soviet times up to now. But, square meters stay the same. You just change the denomination and off you go. So in times of, stress and possible, debasement of the currency scenario, I mean, I'm not saying it's happening, but it's always nice to have this optionality for free, right? It could preserve your capital, right? And I think it's a natural allocation of capital as well. So my point is, whatever happens in economics and macro and micro and all this stuff, the demand for real estate will stay there, right? It's not going anywhere. It's just the form of it, how leveraged people are they buying to rent out, this kind of stuff. But it's always going to be there, and it's got properties that other asset classes do not possess.
Do you have any competitors in the fintech lending space? I would say no, because this is really a very specialized business model, but you have a better overview.
Well, there are a lot of fintech startups and operations that focus on real estate. I haven't seen
That's true.
I haven't seen one that would focus on discounted debt. Typically, they would be raising money to build a building, or whatever it might be, a department store, whatever. Some guys have done something close to REIT. So they raise the money, they buy the house, and then they rent it out, right? So I've seen those. I think I've seen a few lending ones, like the second product that we are planning. But discounted debt is a little bit more difficult because, it involves a lot of expertise. So you can't go to the bank with €5 in your pocket and ask the manager for a list of distressed loans, right? Mm-hmm. He or she, they're not going to talk to you, right? So you need to do some work before you can have these connections. You need to make a few deals so they know that you're a serious, entity. And only then you have these connections and opportunities. And the same goes for, the legal side and the legal expertise. Legal people are very kind of efficient, they're not going to waste their time, their precious time on something that is not interesting for them, either financially or emotionally, right? So again, you need a few good deals to have this confidence to know who's good and who's capable of what. So a lot of kind of nitty-gritty details that you need to know that is very difficult for a retail guy to have. I would say impossible to have. And the same applies to the platforms, right? So you basically need the right team to be able to do this. And as I've said, most of these fintech startups are either IT people, right? So they don't typically possess these expertise. There are exceptions, but typically they don't. And, then the other typical option would be an existing business that just wants to raise money, and they're big enough to be able to develop this, platform and get a license and all this stuff. So I think that's the reason, because we had this business that was successful, and we had the expertise, and we kind of just brought it all together.
In August, I read on LinkedIn some news about plans for Germany. What can you tell the German friends about it?
Yeah, so the license that we hold is a Latvian license, which means it's EU regulated. But in order to provide the service in other countries, you have to go through the passporting process. It's the same process for banks, funds. It's kind of how financial institutions in different European countries can work without, having to set up a new license with the company and the stuff, right? So we've got the passporting for Germany, and we've got the passporting for Spain, right?
Congratulations, by the way.
Yes, thanks.
It was not easy going, I expect.
It was actually pretty smooth. It was smoother than we expected. But again, we had experience with passporting before. So it's a matter of expertise, I guess. We knew how to submit it and what to do. And, we did it right, basically. But yeah, it's a big deal. Currently, we are translating all the necessary documentation into German and Spanish. And once it's done, we'll be able to, provide it to investors in those two countries. And that's our focus, right? So we believe we know both markets pretty well, and we had experience there. And they're big markets for European standards. So yeah, we've done it basically. And also, just to give you an indication, in terms of our brokerage license, we actually obtained it fairly fast. I think it was something like 5 or 6 months, which I think is a record, to be honest. And again, it's nothing fancy, but you have to do it right, and you have to be serious about your procedures and how you treat AML and stuff like this. So you can't submit just the basics that they ask, basically. And that's one of the mistakes a lot of fintech companies make. They look at the regulation and they submit like the basic requirements, and that's just wrong, because the regulator looks at it, and and the guys there understand that you are not really versed in the regulatory space, and they just send it back on and on and on.
I'm curious to hear from you about your experience, especially with BaFin. Why I mention this expressly is that what I have heard is that, yes, there is a certain number of companies in the European Union, let's say it that way, that is some kind of astonished how reluctant perhaps sometimes BaFin is. And what can you tell us about your experience, especially with BaFin? Perhaps you have positive messages?
Currently, this experience is just starting, right? We'll have to see how it works. Most of my experience has been with the local regulator. It used to be as a separate commission. Now it's the central bank. I would say these guys are similar everywhere, and on European level and in particular countries, they kind of follow the same approach, and you can't blame them for that. So they're kind of played by the book, very strict, increasingly strict, I would say, especially in stuff that's to do with risk, that's to do with MiFID, that's to do with AML, all the sanction lists, all this stuff. So I would say generally the regulator is not very flexible. So again, I'm happy that some change is happening in the fintech space, and they understand that you have to give a little bit of freedom for these companies to develop, right? And local regulator has been very forthcoming with our idea, because I think it fits their kind of view of where the industry is really going. So we'll have to see what happens with the rest of the regulators. But, in our case, I think it will be very straightforward, because we're looking at capital raises for European businesses, and we are targeting European investors. So we're kind of confined to this European space, right? We don't have any issues with sanctions, pretty much. We still have to check all the clients, but, they're pretty unlikely to be on those lists. So it's kind of a technical process. We're not, selling our stuff in US, in China. So all these geopolitical things are kind of somewhere out there, I think if you're serious about your financial business and you're serious about working in the finance industry, you kind of have to understand that you'll have to work with the regulators. There's no way about it, and you just have to accept it and, go with it.
Yeah. To mention something very positive about BaFin here in Germany is that they really try hard to get in touch with the fintech community. And tomorrow starts a 2-day summit, BaFin Tech called, where BaFin invites fintech representatives from all kinds to Berlin to talk through current issues, and it is not only about fintech lending, it is far beyond fintech lending. And this is really very valuable because we'd also have the chance to meet up with the top level of BaFin and to exchange views. I was there last year for the very first time, and I was really impressed. In the meantime, I have learned that this is quite normal in the Baltics, especially in Latvia. They already have a very good and normal relationship with the fintech space. And here in Germany, we welcome this approach very much, because when we end up where you guys in Riga have already ended up one day, then this would be great to have really a good labor relationship, let's say, with BaFin, where you can talk things through and quick level. That would be very, very welcome from the fintech space here. But that's another story.
Well, I mean, we are social beings, right? Communication is key. It doesn't matter if it's regulator and the fintech guy. It's just general rule. If you don't communicate, you don't know what needs to be done. So it's
absolutely,
good, yeah.
Absolutely. As always, I really have to say that the Baltic Supervisory Authority really serve as a positive example. I have heard already so many interesting stories of how you guys are able to work together and how really both sides are really interested in finding a quick and solid solution. This is really something where Germany is still, the German Supervisory Authority still has to walk a little bit. But the message I would like to call out today is I think we're on a very good way, because the BaFin Tech that is going to start by tomorrow morning is really one of the important pieces on this way.
I think Latvia is also interesting in terms of costs, right? I would say it's cheaper than Germany for sure, in terms of labor costs, in terms of your, office rents, in terms of, how expensive is it to support your license? Because license, it sounds great on paper, but under the hood, it's a lot of people in a lot of positions that want a lot of money, and it's not like you can have this piece of paper and not have the staff, right? Or, basic infrastructure. And this stuff adds up, right? So if you're a startup, and you're operating on a tight budget, it makes sense to save a little bit of money and get basically the same thing, right? So I think that's the competitive advantage too. But I think the approachability of the regulator is also very important, maybe on par with the costs.
Let's turn back to INDEMO's business model again. I know that your company is still rather at the beginning of the development, but can you, when it comes to numbers, tell us a little bit about how many investors you have boarded to date?
So it's a process, right? It took us, I've mentioned this before already, but it took us almost 2 years to get where we are. And what did we spend these 2 years on, right? getting the regulatory stuff right, submitting documentation, all this communication with the regulator. Then we had to build up the IT solution, which takes a long time. We had to get the offering memorandum for the product done and approved by the regulator as well. But at the end of the day, it's still a platform, right? So we had this period of beta testing for all of the summer. And basically the beta testers were our partners, colleagues, that were investing in a real product, and they would leave comments and their, ideas of how to improve the platform, right? So that went on for, I think, 3 months. So we launched it in June, and it's actually finished today. And today we're opening our doors for all the, investors that are interested, right? So you can actually go on the website, register, go through the ML process and invest. So during the beta phase, we've created, I think, 3 investment notes, and each investment note holds a number of properties in a number of these data instruments. So basically each node would have maybe 6 different properties, right? So we sold out 2, and I think the third one is like 80% sold at the moment. And I think we've raised like $500,000 or something like this. Yeah, it's not a huge number, but still, it helped us work out the mistakes and get us to this point. To judge the success when it's in live mode, we'll have to wait and see. But I think we've done everything for it to be as transparent as possible. And I think the return is attractive and the asset class is attractive. So I have high hopes for it, actually, but we'll have to see, obviously. So I encourage everyone to log in and at least check it out,
How do you exactly ensure that high quality loans and debt titles are offered to your investors? How exactly do you perform this assessment?
Yeah, well, we rely on our company partner in Spain. It's a regulated company as well. They have the status of a lender, so the company can, lend its capital to prospective borrowers. It's another licensing process. So the team in the company, they've been doing this for decades. They have the expertise when it comes to legal. They know the market. They can tell a good property from a bad property, so effectively we rely on professionals on the ground. We don't make those decisions. Right. But the investor makes those decisions, right? Because the investor can look at the properties himself. And in fact, if you log into the website and check out these notes, you'll see a map and you'll see where they are located, and you can look them up and you can check out the average prices for that area in Barcelona, say, or Madrid or something like this. So it's pretty transparent. You know what you're getting, and you know what kind of rate you're getting if everything goes according to plan. So the biggest enemy in this process when we're talking about discounted debt is time, right? So you have to get it done within a particular time frame, right? If much like with construction, like on paper, construction looks very nice, but if you have delays or if you have some permits, problems with permits, your return goes down exponentially, right? The longer you waste your time. So it's a kind of the same approach. You have to get the out-of-court settlement as soon as possible, or you have to go through the normal court procedures, but you want them to be non-delayed, right? So you have to have the right lawyers. You have to have the right judge. You have to be smart about it, basically. And these guys have proven that it works, and they have a good track record, so we rely on them.
Okay. And one very last question. question that is important for the investor's perspective. What can you tell us about the handling of the portfolio in case of insolvency of your platform? How would this be managed? What can investors expect?
So it's a MiFID license, which means there are additional insurance layers for investors, right? So we have to abide to capital adequacy ratios imposed by the regulator. So if we don't have enough capital, they come to us and say, well, where's the capital? And we have to raise it, or the current shareholders need to inject the capital into the operations of the company. So it's not like your typical limited company where, you go bankrupt and nobody notices. We're actually being watched. So that's good. But say the platform is insolvent, then you get an investment protection guarantee of, I think it's 20,000 euros. According to EU regulation. So anything up to that amount on your account will be reimbursed by the local financial system, basically. And also, say you invested your money into these loans, like discounted debt loans. Once it's done, this money is not on the balance sheet of the brokerage platform, right? This is something very important to understand. And it has no relation to the obligations of the company. So these are, investors' assets. They are not held on the balance sheet of the platform. And if the worst happens, then, there's a procedure of how these assets are recovered. Typically, this would mean that in our case, it would be the Bank of Latvia appointing a liquidator who will take over the management, the servicing of the portfolio, much like in the process of bank liquidation or any financial entity. The role of the liquidator is to sell the assets at the highest price possible and recover the invested amounts. So, it's actually less risky than keeping your money above the insurance amount in the bank, I would say, because it's segregated. The risk is on the operation side. So, if we mess up, if the partner company buys the wrong property, if there's fraud, these are the real risks. I would say the risk of bankruptcy of the platform is a risk, but it's not the biggest one.
Okay, thank you very much. That was really important, I think, to know. And that brings me to my final words of this podcast. I would very much like to repeat it once you guys have done some more business, and perhaps we meet up again next year or in 2 years, and then let's look together back how INDEMO will have performed. That would be very interesting, because I really like this business model and also the perspective, especially in view of the Spanish market and the German market, which both I totally side with you, are very vibrant real estate markets. Yes. So thank you very much, Paul, for your time.
Thank you for the opportunity. And of course, I'll be happy to do this again and update you guys. And, generally, if I would say that our team is super approachable. So if anyone is out there looking for a collaboration, or is just, who wants more information on the stuff that we do, I'm sure you'll provide some details, contact details and such. So just contact us. We're happy to communicate, basically. And again, thanks. And, let's keep it going and let's do it again.
You are really a great team. I visited you guys, your headquarters in June, and it was really fun to meet all of you. Really very good. Yes. And
thank you.
Good luck and all the success for the future. Thank you, everyone, for listening. I hope you have enjoyed this episode. Please make sure you subscribe to our podcast and follow us on LinkedIn so that you will never miss our podcast. Stay safe and sound, and see you soon.